Well, welcome everybody. My name is Andrew, obviously from EMP. So wanted to have a conversation as I kept getting emails from our payroll provider, from Gusto. I kept hearing about this ERC employee retention credit. And, reading some of the documents, I'm like, I think Angela, I was messaging with Angela and I'm like, this is complicated. I think I understand a little bit about what they're saying. I feel like we may qualify, but I'm not sure. And I don't want to leave free money on the table. And then through some conversations with some other nonprofit EDs that I have, people were saying, yeah, here's our estimated what we're going to receive. And I'm like, okay, we definitely need to look into this. And so as EMP's bookkeeper and I were chatting, we thought we probably should go to somebody outside that really understands what this is and can kind of talk us through it. So that's the design for this session. Is I'm just going to pepper Brent with questions. I think Andy, as you have questions, Angela, as you have questions, please feel free to put them in the chat or to just unmute yourself and ask them as well. That'll make this the most beneficial for our CEDP partners. So Brent, first, give us, who are you?
Yeah, hi, it's good to be with you. My name is Brent Taylor, and I live here in Fresno. I'm a CPA. I've been practicing in accounting, consulting, and tax for over 20 years. I've got practice of my own. I've also worked inside of nonprofits in various financial management roles in various sizes from small to large. And I help for-profits and nonprofits in the services I provide, as well as individuals. So I've filed several of these employee retention credits and seen hundreds of thousands of dollars be received by for-profits and nonprofits. So yeah, that's a little bit about me.
Awesome. Well, so give me as much as you understand the history, the context of this law and rule. This, from my understanding, this is a newer thing. But why did it get created? What's the history of it? What is the government trying to incentivize or to support in this law and rule?
Sure. Yeah. So when COVID first hit in March of 2020, they passed what was called the CARES Act. And at that time, the employee retention credit was part of the CARES Act. And it really was to provide an incentive for employers that were experiencing financial distress to try to maintain high employee levels to keep their staff on board. And so we traveled through year 2020. And at first, this employee retention credit was available for employers if they did not take the PPP loan. And so if you got the PPP, you couldn't do this too. But in December of 2020, and this was the big shift, they changed that. So they said, hey, you can get this now. You can go back to 2020 retroactively and get those, even if you got a PPP loan. So that changed it for a lot of folks because a lot of people took advantage of that PPP loan situation. And so that's the history. And now they've extended it all the way through 2021 and even, if I might say, richened the benefit. It went from 50% of wages for the year to 70% of wages per quarter per employee. So it became a little bit easier to qualify in 2021. So there's a lot of financial resource opportunity on the table. So that's a little bit of the history on how we got to today.
So give us some more program details. Is there a certain amount of size staff you have to have, a certain amount of income you have to have, or is it kind of all groups and sizes?
Yeah, good question. So if you're for 2020, so 2020 and 2021 are different. If you're 100 employees or less, it's the most generous in the sense that you have a lot of eligible wages available. So how it works is this: in 2020, you can be eligible in one of two ways. First is you experienced a drop in gross receipts. And this is for for-profits and nonprofits, both types of entities. So your drop in gross receipts, and gross receipts can be anything from charitable contributions, grant monies, maybe you sell some things and you have some revenues, any kind of income source. If that dropped, in 2020 as compared to 2019 by 50% or more, you're eligible for that full quarter. So you compare quarter to quarter. So that's one way. Now in 2021, that got easier to qualify. You only had to drop 20% from 2019. So it became easier to qualify. So that's one way you can qualify. So yeah, and it really is available for what are called eligible wages. And we can get into the definition of that later, but that's the first category of qualifying. The second category is this: if you had a full or partial suspension of your operations or services. So, that can range, and there's a lot of questions that arise in this area. Hey, did we? But it has to be due to a government order. It has to be because the government order said we needed to do this, therefore we did this. It can't be like, well, we just thought it would be a good idea to close. It can't be voluntary. It has to be because you were complying with a government order. And so that's the second way you can qualify. Those are the two kind of main areas. It's one or the other. You don't have to do both. It's one or the other.
How would we know, or like in your estimation, is every one of the like nonprofits that represent the or EDCs or CDCs that represent our group, are all of them probably eligible, or is that like a case by case basis? Just start a conversation with you and kind of thing. Like how would we determine whether it's worth opening this door or not?
Yeah. So it is a case by case basis, but the core, I guess, guidelines for figuring out, hey, did we experience a drop in gross receipts? That's pretty straightforward. You can provide some numbers to me and I can help you compare this year to that year and come up with, hey, yeah, you experienced it based upon a drop. And we could say that quarter qualifies because you do it quarter by quarter. Again, it's also case by case when it comes to, did we experience a full or partial suspension of our services? So you start asking the question, hey, was what we were doing after COVID comparable to what we were doing before? Or did we have to make such radical changes that it affected our business significantly? The language in the IRS code is more than nominal, and they have definitions to that. So again, it's a case by case to see, hey, was it more than nominal on how it impacted the services you were providing, the work your employees were doing? And so
in terms of justifying any kind of reduction in staffing, is that what you mean by it altered your services?
Yeah, and that is one of them. Yeah, if you reduced your staffing by more than 10% because you were complying with a government order and therefore you had to cut off an area of service, then or it dropped your hours, significantly because of that.
Okay. So. Yeah. I mean, that would be, E&P was in that scenario, right? Where we, because of government mandates, we had to stop Saturday sports, on campus literacy intervention. So giving a sense of what is the process like? What do you need from a CBO or a partner to get started? What are some of the resources that, like how would we engage your services to kind of figure this out?
Sure. So the process is, first, it's having that conversation, gathering some initial information just about your organization, services you're providing. Hey, do we think that you're eligible? So one is determining eligibility from those initial conversations and sharing of information. And then second, if we say, yeah, you know what, you're eligible for this period of time, what I would then do is say, hey, I need payroll information for this period of time for the employees that we're working. And I would then calculate how much the credit's going to be. So that's step 2 is the calculations. Then step 3 is there's filings. We have to actually go back and file amended tax returns for your quarterly payroll tax filings, then Form 941. So those are the 3 steps, is kind of that initial conversation to determine eligibility, share some information, and if it's a yes, calculate it, and then file it. And so and then right now, the IRS is looking at probably about 4 months for receiving your funds. So there's a little bit of a waiting period, but it is happening. people are getting their monies, and we're seeing that happen. So the key part, though, is one of the things that I know maybe starting with is, how could this benefit you? Like, how can you sort of quantify, what does this look like? Potentially in 2020, this could get you up to $5,000 per employee, right? And in 2021, it could get you up to $7,000 per employee per quarter. So if you paid an employee $10,000 in quarter one and quarter two, that person in 2 quarters you'd get a credit for $14,000.
Yeah.
And that's just for one person. So if you have 10 people, that's going to add up pretty quick.
Yeah, I think that's when I started talking to people that actually had done the calculations with a person. I'm like, oh, this is a lot of money potentially for like an organization like EMP that's sub $1 million. We're not the biggest, but I mean, that's substantial. That could be a 10th or 15% of any kind of income over this last year. So yeah. What are the due dates on this process? Welcome, Angie, Christian. I saw Chris for a little bit. What are the due dates on this? Like for 2020, we need to file by a certain time? Is there a window there? Same for 2021. Obviously, our taxes aren't due for then yet. So yeah, are you filing for both of them at the same time or just 2020?
Yeah, good question. So what we'd do is we'd look at it 2020 as a whole, and you have really between 2 and 3 years to amend those tax returns. So there's a pretty sizable time window, but of course, it'd be helpful to have the funds sooner than later. So
yeah,
so there's no pressing deadline at the moment. And then for 2021, the same. If we're going to go back and file the amended quarterly tax returns, it's the same, timeline.
Yeah. Okay. And then if we're if we're doing our 2021 taxes, this could the ERC could be a part of our tax filing for this year, or is that how it works for 2021?
Yeah, so for 2021, for any quarter that's already passed and you filed, let's say first, second, third, because we just finished third quarter here, we'd need to go back and get your original, figure out what the number should be, and file an amendment. And we do it quarter by quarter.
Okay.
Based on how much you qualify. One of the things I do need to say too is qualifying wages. If you did take the PPP, you can't double dip. So if you had forgiveness from the PPP and you used payroll wages to get that, and you had to use at least 60% of your PPP loan to get that, you can't use those. However, there are usually quite a bit more wages on the table because the PPP was only like 2.5 months worth.
Yeah.
And we have like 3 quarters worth in 2020 and, and more in 2021. So just a heads up. So if you said, oh, I already, did the PPP forgiveness, I'm not going to have it. It's usually there's still plenty more available.
Okay. So you're looking at potentially 4 to 5 filings for 2020 and then the 4 quarters of 2021. And then is this going to, is this just, it's ending in 2021, or is this part of some of the legislation that, is part of this $1 billion package?
Right now, they have extended it through the end of 2021. There's no definite confirmation of going any further at this point.
Okay.
So, yeah. Okay.
Fantastic. I think I'm getting close to the end of my questions. Andy, Angela, do you have any questions as you were there at the start, and then I'll open it to Christian or Angie.
No, but thank you, Brett.
Sure. Yeah.
Angela, anything on your end?
Yeah, just kind of to confirm. So these credits are applied quarter by quarter basis. So we can apply for the full year. We're just gonna get depending on how we did each quarter, correct?
Yeah. So we'll evaluate quarter by quarter, and then we would file based on qualifying quarter. That's if you meet it with the gross receipts test. If you meet the full or partial suspension test, you only get the wages during the actual period where you said, hey, we experienced a full or partial suspension of operations. So it depends. It depends which way you qualify. So it may overlap into 1 or 2 quarters, but we're going to go capture it quarter by quarter.
Perfect. Thank you.
Sure. And I don't know in terms of this group if there are any wages paid to employees in for-profits or if it's all nonprofit. Because in the for-profit world, there are additional regulations in regards to if you're a 50% or more owner. And so that, which is relevant for, for most nonprofits, you have your board, it's not owned by an individual or family. So
all of this group is, there may be folks that have their own business that are a part of it, but this group is all nonprofits.
Okay.
Or CDC, it's, the 501c3 or CDCs.
Got it. And again, in this group, there may be ministerial wages, not sure, but are there any in that group?
I would not think so.
Okay.
Yeah, I don't think so. Because there are very few of them, if any of them are religious, categorizations.
Okay. If I needed to speak to those particular issues, so.
Yeah.
Okay.
An important question I left off the table was funds. So, I know we talked a little bit about, how you're billing for your services. So, maybe give us an update, like what do you think a fee per service? Is it, how would you kind of estimate what it would cost? I would say most of our CBOs, there's quite a range. So we have a couple that are on the larger end, and then most are probably in the $50,000 to $250,000 range in terms of annual operating expenses. So I don't know, Andy would probably know a better answer to that for the CEDP, but that would be my guess. Yeah. So what would be what would kind of cost look, or how would we process that with you?
Sure. Yeah. So how that works is to go through the process of eligibility calculation and filing. Would be, it usually lands, it's a fixed fee, but it usually lands at about 9 to 12% of the credit, time-wise, work-wise. So if you're going to get a $20,000 credit, it might be between $1,800 and $2,400 for the service. Just again, it's a fixed set fee upfront. But that's going to vary in that range based upon how many employees you have, how many quarters we need to do, how much coordination with other PPP wages and loans that were forgiven. So it's going to vary based upon those criteria and even eligibility, what work we need to do to process that. So.
Okay.
So yeah, again, does that provide what you need for the?
Yeah. Mm-hmm.
Okay.
Yeah, that's great. Angie, Christian, any questions that you would lob towards Brent?
I don't. Thank you.
Brent, could you put your email and or website in the chat, and then we'll also, of course, share this out in the recording and over our email. But outside of the ERC, what kind of other services? I know we started a conversation too about doing. EMP's never done a review. Any kind of financial review. So we have a fantastic bookkeeper. But I think at the stage that we're at, feeling like, okay, we even have applied for some federal grants and some other resources. It looks like it would be good. And I talked to my board and they felt good about, doing that financial review as well. So what other kind of services, would you maybe offer? Most of our organizations would have an internal bookkeeper or a board member that does their bookkeeping, that a CPA could be a support to.
Sure. Yeah. Well, there's just consultative services. If you're processing a payroll question, you're processing a tax related question, just to be able to provide advisory services on that front. We prepare 990s and 199s for federal and California purposes. We'll do, take a look at your books. If you have questions like, hey, does this look right for our accounting? I know, when you get a grant and there are certain guidelines, you want to account for a certain way. Anything from, hey, this accounting software is not working for us anymore and we're thinking about a change. Can you help us with that? So anything accounting, tax, advisory related on those fronts, our firm provides that, and as well as individual and for-profit services as well. So on tax and consulting. So,
Okay.
Yeah. Now for the email address, is that just in the chat box to everyone? Is that the best way to do it?
Yeah, I think so.
Okay.
Yeah, that'd be great. Andy or Angela, anything else you'd want to say to wrap up?
Just thank you. Thank you for putting this together, and thank you, Brent, for your
Sure.
knowledge.
Yeah, you're welcome. And I do want to say this, that there really is a notable opportunity out there. And there are multiple ways to potentially qualify. So if you have questions, feel free to reach out. I'd be glad to explore that with you and see if it's going to be a fit for you. But I think there's a lot of potential help there.
And a good, just probably clarifying question, is it have any cost to determine eligibility about our organization with you? Is that like we have to pay for that kind of filter, or how does that work?
I think what we'll do is we do an initial consultation just to talk through it, and there would be no cost to get a general framework. Now, we may need to dive in, and there's a deposit, like if it looks like it on the surface, there's an upfront deposit just to explore that, but it's a small piece. Yeah. And it counts towards the final cost. It's so, but yeah, front, we should be able to tell initially by gathering information without cost.
Cool. Yeah. Well, yeah, I think as you said, Brent, like to me, one, I think watch folks that are watching this, and then everybody obviously that's online, like let's not leave money on the table. Like the government is trying to support us as organizations, and so the worst thing we could do is, because we, like as smaller groups, don't have things, and as we don't have a full-time CPA on our staff, we're missing some of this knowledge information. Brent is offering himself to be that resource for us. So I think I appreciate your heart, Brent. You've been a huge support to so many people I know. And so I think to partner with somebody with a knowledge and resource is great. We're just grateful for it, and let's not leave money on the table. So yeah, thank you for your time.
Yeah.
Great. Yeah, thank you. Great to be with you.
Bye.
Bye-bye.
All right. Well, I'll see y'all later.
Okay. Take care.
Bye.